Friends, the topic of this podcast is defensives versus cyclicals, a Nifty story. A year ago, we had a terrible crisis in the market. The Nifty fell significantly. At the lows of the Nifty, at the bottom when there was despondency, what was the market view? What were experts telling you? Most people were telling us that it is best to keep our money in defensives. Investing in FMCG type of consumption stories was seen as the sure shot and safe bet. It was believed that these businesses will move the Nifty over the next 1 year. Today, as we look back at that financial year, how does this story look? Have defensives really lived up? Has FMCG really been the market mover of 2020-21? I took the closing valuations on March 31st and compared it with the day on which Nifty hit a bottom in 2020. So from the bottom of 2020 to March 31st, 2021, we have tried to compare the movement of the Nifty, of defensives and a select set of cyclical stocks which during the lows of 2020 were projected as stocks not worth owning. So that's a very interesting contrast that the markets, the experts and the thought leaders painted in 2020. So I am just trying to see whether the paint is still holding on and how Mr. Market has spoken its verdict to the experts. So this video is about the Nifty, the defensives, the cyclicals and also about experts. So let's go into the video. First, Nifty has been a spectacular performer, no doubt about it. During the lows, there was absolute consensus that you needed to buy stocks like Lever, ITC, Nestle, Pidilite, Asian Paints. These were 5 stocks which everybody who had a voice was shouting at. And Twitter was full of people tweeting by the day, by the hour, by the minute, and you had webinars, you had all sorts of things. Interestingly, during this period, Nifty has done 93%. And there is only one stock which has outperformed Nifty in the consumption basket among the biggies. And that's not these 5 stocks, it's Titan which did 94% from the lows. So how have these companies done? Lever has done 30%. Nestle has done 32%. ITC did 42%. Pidilite did 42%. And Asian Paints, the god of consumption, did 69%. So, underperformance by FMCG from the lows of the Nifty is a reality. And let us now contrast this with what happened in the dogs of the Nifty. So I am going to take 4 dogs of the Nifty and compare the performance of the dogs of the Nifty with the Nifty. So while Nifty did 94% from the lows of 2020 to March 31st, 2021, Tata Steel did 200%, JSW Steel did 225%, Vedanta did 265% and Hindalco did 271%. Clearly, from a market bottom, it pays to be a contrarian. It doesn't require rocket science. Whatever be the weaponry you use against contrarian investing, be it on Twitter, be it on YouTube, be it on webinars, wherever you use these weapons, the evidence of contrarian investing being a superior choice at market bottoms has been proved once again, and it has been proved in economic circumstances which never existed before. So that's a very, very interesting point to note. So the gods of the market underperformed the benchmark significantly, and the dogs of the market outperformed the benchmarks significantly. And that essentially is the story of 2021. It's a story of a financial year. It's a story of how opinions don't translate. It's a story about how contrarian investing can trump opinions, however sophisticated they may be. It's a story about how conviction can deliver superior returns. It's also a story about how conviction cannot be externalized. It has to be internalized. And that is not a simple story, but it's a story every one of us must own. Thank you for watching this video. Do share it with your friends who are very focused on Nifty and beating the Nifty. After all, we should know what it takes to beat an index in difficult circumstances. Thank you.